NFP day today. Very, very wide variance on expectations from the main banks and analysts today. Huge variance. The Reuters poll had a high of 970,000 and a low of 100,000. But I've looked at some other polls since Wednesday, since the ADP and the and yesterday's claims number, and some banks have gone down to zero and negative zero. ANB Bank, Amro Bank had them negative as well, and Oxford Economics were talking about a negative call. So see what happens in a few minutes. We've got about 8 minutes or so before the data falls. So as usual with these sessions, obviously put some questions in the question box if you want to chat, you want to see what what's going to go on with the markets. But really the story of the weaker dollar continues. How long this can go on for, it's difficult to predict, but trends are trends, and that is the main story of this new month, certainly the run into the end of November as well. And since last month, remember we had that big surprise at NFP last month. It came in weak again, 638,000. 100,000, I should say. So, as I say, big, wide variations. Various calendars have different numbers. Our calendar's got 7,000. FinViz, I like their site. They've got 650,000 at their top end. Action Economics, who we follow quite closely, they've got 540,000 for today. 480,000 on Forex Factory, another key calendar site. So Jumbo, what's your view on gold? Well, gold, my friend, has continued. Let's have just a quick look at gold before the data comes out. Gold continues to weaken, but it had a very, let's just put the charts up. Do that right, there we go. Gold had this is the 1 hour chart since the beginning of the month, so we've had this big rally this week. But if we go to the daily time frame, you see we had a very, I'll zoom that up a bit so you can see a wee bit better. So you can see we had a very a very weak run down into the end of the month from this huge candle here on the 9th of November. And that, remember always with candle, the body candle, the size of the body of the candle matters, Jumbo, and it just took a few days for it to unwind, but when it did, it went down really quite aggressively into the end of November, breaching this time last Friday we closed under the key 200-day moving average. So that was a key level. So the shorts had managed to run it right down to the 200-day. Final day of trading on Monday for the end of the month, tying up of businesses a bit, and then we've bounced back quite aggressively this week. So a huge rise on Monday, perhaps catching a lot of the shorts out that got in late, but certainly a lot of the short positions would have closed out at the end of the month, even before the Thanksgiving holiday potentially. But anyway, gold continued to unwind, and then we've recovered significantly over the 1800 handle. So we're back over 1820, which was a key, support level on the daily time frame as we were coming down. It didn't last for very long, and we're now attacking again today the 1850 area. So close today over 1850 would be significant. But as you can see, really we rallied earlier in the week. This is Thursday here, and this is today here where the dotted lines are, and we've basically been going sideways. So today you see those three. Hopefully you can see those three fractal highs there coinciding with the top of the Bollinger Band. See how the Bollinger Band squeezed in? So we've been right. The lower band is rising. The upper band is off the chart here. If I zoom out a bit, you'll hopefully be able to see it. There you are. You can see we've sort of compressed at highs, bit of squeezing on it, but really we sort of stuck here. So there's another fractal high there. So 4 running through 1845. So a key resistance today is 1845, and support is the 20-hour moving average at 1840, and then the 50 period, which coincides with the bottom of the Bollinger Band there. Let's zoom it up. Bottom of the Bollinger Band and the pivot point and the 50 period moving average at 1835. So quite a tight, narrow range on gold today. So it's continuing to recover, but it needs to move back over 1850 for the next resistance to the upside. Waddles, how long do you think the dollar weakening will last? Well, it doesn't matter. Some of the big, I say it doesn't matter, as a trend following trader or a mean reverting trader, depending on your time frame. At the moment, the dollar's in a downtrend. Okay, we've got a strong euro, we've got strong sterling, and the dollar's being sold off against all its major crosses. Where it's, the biggest headline I saw this week was this against the Swissy, where we're at a 5-year low. We're back to January 2015. Remember January 15 traders? When the Swiss National Bank removed the peg against the Swissy, and we had a massive volatility. Well, the Swiss dollar pair is down at those levels here. So Swiss all the way down here under 89. This is a Swiss against the dollar, demonstrating that weakness very, very clearly. Against the euro, you can see we're all the way up here over 120, which is all the way down here from earlier in the week, over 121 from yesterday and today. And, obviously 122 is now in target as we rally. But, rallies don't go on forever, but trends can go on for a very long time. So it's just what it is. The uptrend perhaps caught a lot of people certainly against the euro by surprise. But, trends are trends, and off we've run very, very strong November. As you can see, an incredibly strong start to December as well. So lots of this was talked about, the weakening dollar. Things are conspiring to suggest that the central banks are all meeting again this month before the end of the year. They're all talking about, obviously, putting in more, or continuing QE, more accommodation to get the global economies and their particular economies going again after this horrendous 2020 that we've had because of the pandemic. Obviously, excitement and anticipation of a vaccine. There's 3, if not 4, if you count the Russian Sputnik vaccine, 4 vaccines on the table already, and there's lots more in the pipeline, Sinovac and others as well. And the UK were the first to actually approve the Pfizer combination with BioNTech for use in the UK. Those doses have actually arrived in the UK, last night, and they're looking to actually roll that out to high vulnerability groups in the UK from Tuesday next week. So it's moving forward very quickly. The Europeans and the Americans are also looking to approve these vaccines. So that's given a lift to sentiment, and therefore that's adding to the weight on the dollar. So to answer your question, Wandil, who knows? We're at these big lows. If you look at the dollar index as well, just before the numbers come out, we've got a few seconds away from the numbers coming out. I've got a quick chance to look at where's my dollar index chart? There we are. The dollar index is the hourly chart, but you can see it's going down. The 4-hourly chart also continues to trend lower, and the daily chart, very, very big fall. Here just at the beginning of November, we were all the way up here at 94, and here we are all the way down at 90.50 at the moment. A big weakening of the dollar, and it'll continue. It won't go on forever, but the trend remains. The south side, again, as an end of day trader, the dollar index has its 20-day moving average at 92.10, so a long way from where we are at the moment. Now then, I think I'm not seeing all my questions, am I? Or am I? So many investors are confused into deep research for trusted. That's not a question. No, I'm getting spammed here on Facebook. Dearie me. Okay, I'm not sure if that's. I'm not sure what that is actually, but let's have a. If I go to my Facebook questions, I can't see them. Anyway, data should be out or about to come out. Let's have a look at the dollar index. This is the daily. Let's go. Let's drill down to the 1-hour time frame. So we've been going sides. We're at 90.50 at the moment. Euro, probably more of interest to everybody. Let's have a look. Here we are. Let's go down to the 15-minute. So we've been moving down before the numbers come out. We ran to the 50-hour, 50 period there, and bounced up. So numbers coming through as I speak. So let's have a quick look. My workstation updated there. So let's have a look. Non-farm payroll. It's missed. And it's missed quite significantly, ladies and gentlemen. 245,000. So a major miss in the headline number. Last month has also been, remember last month was a big miss at 638,000. It's been revised down another 30,000 to 610,000. So big miss for the headline. 245,000 for the headline for this month. So it's the worst in probably 7 months, certainly 6-7 months for the headline non-farm payroll number. The where's my other data? Oh, it's not. Where's that? I've lost my. Just let me get that For some reason that didn't. Why isn't that right? So that's a very significant miss for the headline number there. So let's just run through that again. So 245,000 headline. Earnings has ticked up by one tick, so we're up 4.4%. So that's fairly good. And what's going on with my? Oh, dearie me. Here we are. 6.7% for the unemployment rate. So that's gone down a tick as well. Average hourly earnings is up 0.3 of 1%. So that's gone up significantly. But again, it's obviously the weak jobs that are being employed. Participation rate has slipped again. Yeah, that's relatively weak-ish. It's sort of in line, but the headline is one that's going to grab everybody. So we got the euro instantly moving up here, the dollar weakening again here. If I just move that down, you can see that. Hopefully you can see that here. The yen, dollar yen's moving down 103, 103.86. Sterling will perhaps move back up and attempt this 135 again. We're at 134.75. Aussie, both the Aussie and the Kiwi are both weakened, but they're still strong and above the key. Aussie over 74. We're back to 74.25. The dollar CAD remains under 129, which we broke yesterday, when we're moving down again 128.30. So all of these are at significant month levels. These, I mean, the euro up here is at 32-month highs. What's this CAD? This CAD is like a 26-month low down here and breaking to new lows again here. So it's a significant miss as far as the headline number is concerned. Now then, why can't I see my Facebook questions? Let's have a look. I've just got your YouTube questions, guys, and there's not that many of you here. So let's have a look. Yep. So interesting. It's just adding more weight to the dollar. There was a thought today that the number might actually surprise to the upside, but that's a significant miss. 245,000. I wonder who of those guys caught that correct. Let me just check the analysts who actually called that, because there was, as I say, there was a big wide variance on that, and 245,000. That was down with. Nearest was TD Securities was best. Pantheon was around about 100,000. Say ANB AMRO were negative. So our friends at TD Amitrade have called it at 280,000, and above that one Nomura we're talking about 320,000. So a significant miss for headline NFP there. So why can't I see my questions? Well, that's just a bit of a shame. Is it because I can only see I can only see the questions that you're putting on YouTube, guys? So I apologize about that. But again, just to answer Wandil's question, the dollar, that hasn't helped the dollar numbers. Any of you that's trading dollar CAD, guys, remember, so we got another move down here. The Canadian data also came out a few minutes ago. Canadian net employment change is coming at 62,000, much better than expected. Last month was a big beat as well, came in at 83,600. It was expected to cool quite significantly for the November number, but it's coming much better than expected at 62,000 from 20,000 was expected. Wages, participation rate has slipped to 65.1% in Canada, but that's a pretty robust Canadian number and a relatively weak US number, although the earnings number does seem to pick up in the US, but unemployment rate also going down again, and the higher U6 unemployment rate also moving down a tad as well. So headline number a miss. I haven't got on my terminal here the details within the 240,000 where the big misses were, but certainly That is how the market is going to interpret it. And you can see here clearly the dollar CAD being a good example of that as we continue to unwind into the downside. So dollar CAD moving there to S1 there on the 1 hour time frame. Gold should have got a bit of a lift. In fact, it hasn't gone anywhere. So we've had a lot of volatility on gold in this. I take that down to 15 minutes, see what happened. Yeah, huge volatility in gold relative to the movement we've had so far today. We've been as high as 1847.60 and as low as 1833.32. So mixed message in the gold trade then is short 15-minute or the 15-minute. Let's have a look at the 5-minute time frame. Yeah, it was a big old move there as the news broke for the gold. So gold very volatile. Euro less so. Let's have a look. Yeah, less so. I mean, it spiked to the upside, but then cooled it. But then we're moving back up. So it's really a sort of weaker dollar is the overall tone that's running here. Now then, why can't I see? My questions, all your questions on Facebook. Where's the video? Let's see if I can see it somewhere else. No. It's because it's a scheduled event. I'm just seeing your questions. So I apologize if you're on Facebook and you've been asking me questions about what may or may not be going on. Let me apologize for that because I'm just seeing your YouTube. Those of you that are on YouTube, which is where Wandil's question came from about the dollar. But as you can see, it continues its weaker track. So up we go. So obviously the other key news at the moment that's hanging in the market, obviously Canadian and American jobs data, is what's going on in the UK, in London, between the negotiators trying to negotiate this trade deal between the EU and the UK. Well, there was lots of rumours this morning. Reuters had a breaking news claiming a deal was imminent. So either today or over the weekend, Reuters sources were saying a deal was imminent. And sterling's continued. And you see, sterling's continued to move up all week. This is our daily time frame. So a strong November and a strong the start to December as well for the sterling pair, the cable pair, touching 135 yesterday, new 1 year high yesterday for cable. So it's holding up at high. So, but the market is really just waiting for the confirmation of news. We've been here many times before on this 11th hour, the 59th hour, the 59th minute of the 11th hour on before midnight. It's a typical sort of EU trade negotiation coming on. But I say these Reuters sources talking about an imminent deal. But before that, this morning, we'd also had one of the French ministers saying they were prepared to veto the deal. It's ridiculous, really. It's getting down to the nitty gritty of which fish, how much fish, and what types of fish are caught and not caught by EU boats and UK boats within EU what is now designated EU waters. The irony being that lots of Brits don't like the fish that's caught in British waters, whereas the Europeans do like the fish that's caught in British waters. And so they've got to come to, you would have thought there would come to some sort of deal because it's beneficial for both sides. But obviously the real thing that's hanging up the deal is the politics and the politics of things. Neither side wants to be seen to back down. They've got some very strident opinions back at their home bases, both in the UK and as the French have demonstrated overnight in the EU as well. So pressure on both sides, and on both sides are saying they don't want a bad deal. So no deal is better than a bad deal. Both sides consistently say that. But the UK goes to World Trade Organization rules from the 1st of January. It's much more complicated than it is at the moment with this transition period. So anyway, there we go. So sterling up. Dollar down with the NFP data across the board here. This is the Kiwi. That was the Australian dollar. This is Swiss franc again. continue to plummet, new lows here, new 5-year lows here for the Swiss franc. Gold, it's a 5 minutes. You say the initial volatility. So hopefully you didn't have a position open on gold, because that was either taking you out or taking you out either long or short. There was that big volatility on gold, and the other key market, the oil market, continues to hold up with OPEC plus and OPEC itself yesterday coming up with this 500,000 barrels a day increase in production. It's a bit of a surprise. Mark was expecting either a new cut or an extension of the rate caps, but they feel they can allow it to extend. And interesting, the market obviously has taken out relatively well, because we're still over the key $45 a barrel here for US oil. And even, earlier today, we're up at 46.65, and we're still holding $46 as I speak. So, it's relatively well bid. Ali, John, hello, my friend. Is there anything you want me to have a look at? Anything you want to discuss? Put it in the box there, and we'll have a look at it. So, Keyview was here. The only questions I can see are you guys on YouTube. So, I can't see your questions on Facebook, unfortunately, which is a bit of a shame. But such is life with our streaming services. Let me just see if I can see it yet. It's not now, because it's a scheduled video. It should be. No, I can't see you. So I apologize about that, guys. So let's have a look. So questions coming in. Okay, right. I've got another question actually here. Somebody's Dealey's asking about the Dixie. Well, the Dixie, though, the dollar index, as we call it in our CFD profile here, is continues to unwind, continues to be weak, my friend. Earlier, as the news broke, we moved to 90.50 here. This is the 1 hour time frame for dollar index. Continues to unwind, continues to have support to the upside, i.e. resistance to going higher at the 20-hour moving average, which sits now at 90.63 today as we continue to unwind. We're under the daily pivot point today, which is at 90.75. And oops, where's the chart gone? Sorry about that. We've lost the chart, chaps. You got my ugly mug. Why is this not working? I don't want to do that. Chart's gone. Chart's gone. Why is that done now? Have I lost my... No, that should be okay. We've lost one of our streams, I'm afraid. Chaps, we've lost my ability to share my screen for some reason. Let's try the entire screen. No, let's try the application window. My MT4 platform. Oh, it's gone. Oh, dearie me. One of those days, I'm afraid. Some charts gone. Dealey, sorry about that. But basically, I'm sure you've got your own charts. The trend remains to the downside. So for me, the daily trend was broken back on the 5th of November on the daily time frame when it went under its 20-day moving average for the last time. And we've been short now, or the market has been short 21 trading days. If you're trading this intraday, sorry, if you're trading at the end of day, the resistance to going higher, we got three key areas. One is the 5-period moving average, which sits at R1 today, which is 90.95. Then we got our 9-period moving average, which sits at the R2, which happens to be today as well at 91.32. And next is the 20-day moving average, which sits at 92, just over 92. So they're the 3 key areas on the higher time frame to stop the dollar index going down. It needs to reverse to go back up there. The MACD still down. We're sort of moved into an oversold area on some of the oscillators, the RSI, the FBI, FMI, and the stochastics, but the trend remains very much exaggerated from that first move down on the 1st of November. That was another big candle down. 1st of December, I should say. So the trend remains very much to the downside for the dollar index. Intraday, well, we come down to the 4-hour chart. Again, the 4-hour chart, as again, another one that's been under its 20-period moving average from the 23rd. We had a quick spike up at the end of the month on the 30th. There we go. My colleague's trying to share her screen as well, but it's not working for some reason. But anyway, we're going lower. And intraday, there's a bit of a floor forming at the bottom of the Bollinger Band, which sits at 90.51. But we've got resistance at the pivot point, which sits at 90.75, 72, 75. 90.75. So we shall see. There we go. Thank you. Yeah, I do. Yeah, I'm not on Facebook for some reason, but don't know why. Let me just check the setup here. No, it's just Facebook. So I'm not actually on Facebook apparently. So there we go. Anyway, there we go. Daily, can you see the this move here? This is 1 hour. We're moving to the top of the Bollinger Band. We've got support at the bottom of the Bollinger Band. We're moving up this current hour post NFP. So we've got a bit of a dollar buy perhaps here at 90.75, and then resistance at previous support or that low area there at 90.81, and then the R1 here just shy of the psychological 91.00. Okay. Let me just check the settings here. That's all right. Set up. No, it's not working for some reason. That's a bit of a shame. Actually, let's just try if this works. I was just going to start a new channel now. It's supposed to be on, but it's saying title change or not supported. No, it's not on Facebook for some reason. Of all the channels for it not to be working, it's not great, is it? Right, so let me just recap the news today then, guys. There's obviously not very many of you on YouTube. Let me just apologize about that. Daily, thank you for your comments, my friend. So let's just recap of where we were. So the news, the headline, big miss. And Pantheon Economics and TD Ameritrade came close to this 245,000. So a big miss with regard to the headline number. Participation rate has slipped again. Earnings are okay and held up, and unemployment rate has got a tick lower again at 6.7%. But that won't, there's still 20 million plus Americans unemployed. It's not great numbers at all. The new claims yesterday was another huge number, and the dollar is continuing to weaken. At the moment, equity market's still holding up because of the weaker dollar and anticipation of a fiscal stimulus from the new Biden government, or before that, in fact, in December, as the Democrats and the Republicans seem to be coming to some sort of deal around the $908 billion package that the bipartisan team came out with early in the week. Ironically, the president, Trump at the time, he talked about 800 million, 900 billion package, but Nancy Pelosi wasn't having any of it before the election. So, you know, it is obviously clearly all politics in there. But there we go. So that's lifting equity markets. Actually, let's have a look at the equity market, see what we're doing. Yeah, with this daily one, this is a daily candle here on the S&P 500. Quieter days, interesting. We've fairly okay start, fairly quiet end to November there. So we had to lift up. Strong start to December, and then fairly quiet first week. So this suggests we may be running out of steam. Volumes are still quite good. Here, the stochastic's already into this overbought area. Excuse me. RSI at 67 on the 14 period, so it's still got some legs to move up. But you know, has it got a bit overbought? Well, maybe. But at the moment, you see the big support is here, the 3,600, 3,050 support area, and then the big fat support is the bottom of the Bollinger Band, and that 50 period moving average there at 3,400, 3,500. So quite a big level of still. This could fall, but still be well bid all the way down 3,500. But it's still looking like a fairly okay December. You would have expected a bigger start to December, but anyway, let's see how it all pans out. It's still relatively bid. It could obviously all change very, very quickly. The 1 hour time frame, again, you see it's demonstrating this cooling at these highs at the moment. Today, obviously, markets aren't open yet. US markets open in about half an hour. We've got R1 at 3681, so we'd like to see that broken if it's showing some positivity, because here on this 1 hour time frame, you see that fractal high there from earlier today and yesterday, 2 fractal highs, getting higher, admittedly, but we need to really breach through this 368 level, 3,680 level to take us higher. Support the pivot point at 3,670 really, and the 50 period moving average there at 3,668 on the S&P 500. So if there's no more requests for equities or forex pairs or anything else we look to trade, I'm going to call it a day, because we're not getting the level of questions you normally get, because we're not connecting on our Facebook pages for some reason. So we'll have to investigate that, get the techies to have a look at that. But thank you for your time, everyone. And to say, overall, it's a big disappointment for the headline NFP figure. But earnings have sort of held up, and participation rate is also okay. But yeah, the rise at 248,000 was much less than expected. The Canadian data was much better than expected at 62,000 compared to 20,000. And that's a pleasant surprise for the Canadian economy as well. I'm just getting some data through here on the numbers within the 240,000. So that's fell. What we're looking at here, private payrolls are up to 340,000, less than half. The 870,000 was as expected. It was expected to be over 900,000 for private payroll, so that was suggested from the ADP number we got earlier in the week as well. Service sector added 298K. Goods producing 55K. Manufacturing increased by 27K. So government employment was down nearly 100,000, which is not a surprise, but it's less than it was last time. It was 267,000. So it's really, it's just the data's in the truth is in those numbers there, as a quite a big fall there for non-farm payroll for November, the December number, and it also. Quite a significant surprise as well. So I'm surprised we haven't had more movement on the dollar. Treasuries, interestingly, haven't moved that much either, and equities are still relatively bid here, are sort of slipping down here a bit, aren't they? So there we go. So again, thank you for your time, everyone. Those of you that were on Facebook or trying to get hold of us on Facebook, apologies, you obviously can't hear me or see me, but next time, we'll make sure it's working next time. I don't know why it looked like it was working. It looked like it was connected, but for some reason it hasn't connected at all. So take care, everyone. Trade safely. Have a great weekend, and you and your families stay safe. And we'll see you all again next week. So take Take care, everyone. Bye-bye.